Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news the US announced ceasefire with Iran is struggling to hold, with Iran accusing the US and Israel of violations, and Iran are launching attacks, or counterattacks, on Gulf state assets. Israel seems very uncommitted to the US claims. There are thousands of ships waiting to transit the Strait of Hormuz, but they must first now pass Iran's new gatekeeper reviews. The oil price has fallen back, but only to mid-March levels, and still 50% higher than the levels that prevailed at the start of March. And this is doing nothing to restore deliveries of refined product. However, first in the US, the Federal Reserve released the minutes of its March 18 meeting, which exposed how isolated Stephen Moran is on that committee. In fact, some members were open to rate hikes at that time. The vast majority of participants judged that upside risks to inflation and downside risks to employment were elevated, and the majority noted that these risks had increased with developments in the Middle East. They saw the conflict in the Middle East would likely lead to more persistent increases in energy prices, and these higher input costs would be more likely to pass through to core inflation. Those risks are still likely there since their meeting, given that crude prices have risen from $63 a barrel to $95 a barrel when they met, and there's that same level today. US mortgage applications stayed low last week, restrained by lower refi activity. Meanwhile, in an odd move against the mood shift today, investors got higher risk premiums for the US Treasury 10-year bond auction today. The median yield came in at 4.23% compared to 4.16% at the prior equivalent event a month ago. In China, a surge in heavy truck sales, especially LNG and EV versions, is bolstering a view that 2026 will turn out positively for them. Some of this was just a rebound from a weak holiday-affected February, but those truck sales were at a 5-year high in March. Taiwan's CPI inflation rate showed no reaction to the events in March at all, which does seem a bit unusual and an outlier result. And there was an Indian central bank review of their monetary policy overnight, and they left their rate unchanged at 5.25%. In Europe, they reported February producer prices fell 2.7% from a year ago, but this is mainly due to the February 2025 base being unusually elevated. They also reported that EU retail sales volumes were up 1.7% in February from a year ago. And the US Treasury 10-year yield is now just on 4.28%, down 7 basis points from yesterday. And the price of gold will start today up $64 at $4,740 an ounce. Silver is up $3 at $75 an ounce. And American oil prices are down $20, just on $95 a barrel, while the international Brent price is down $15, at just on $95 a barrel as well. The traffic flowing through the Strait of Hormuz is moving again, but only for those that pay Iran's reconstruction tax. The US has effectively shifted this waterway from being open and free to an Iranian asset and a chokepoint. The Kiwi dollar is up 120 basis points from yesterday at this time at 58.3 US cents. Against the Aussie, we've risen 60 basis points at 82.7 Australian cents. Against the euro, we're up 70 basis points at just on 49.9 euro cents. That all means our trade-weighted index starts today up 100 basis points from yesterday at just under 61.9. And the Bitcoin price starts today at $71,919 and up 4.6% from yesterday. Volatility over the past 24 hours has been high, just on plus or minus 3.3%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.